Hi, Warriors. AJ, Brand, Mary. How's everyone doing today? How's the team doing?
Good morning, Dale. Good morning, everybody.
Okay, so I'm so confused. Can you see my screen?
Yes, we see the
Okay.
S&P.
Okay, so why don't we run down what happened in overnight? You know, I know yesterday that that shell that hit inside Poland shook everything up. I think that was what was behind the sell-off in euro. This right here. Okay, and then I read there may have been Ukrainian shooting down a missile. Who knows what to believe, but
yeah, well, I mean, I think most have now come to the conclusion, the officials, at least it's what you say. So
yeah.
Then this morning, again, I think it's the fifth or sixth day in a row that the European morning session, the dollar sells off. So no change there.
Okay. And yesterday cable was outperforming, and today it's euro. Are you tempted to come back to the long dollar side on any of this, Kman?
I am going to closely watch the real data now. Well, real data, the retail sales out later, the industrial production out later. I'm going to watch it carefully because I've started to catch a knife in dollar yen as well. I'm not running it right now. It's still like very short-term stuff, but yeah, I'm starting to think we may be close to have run our course for the dollar if it is a correction. We'll see we'll see on the data really.
Well, you know, we're getting one of my. I didn't look at this before on this TF, but whoops, I didn't want the fib. I wanted a trend line, but you see how this first low, you know, confirmed, and then this low's not confirming, and maybe there's one more shot down for a 3 drive.
Yeah, that's the one that I've got a bit of horizontal support there, exactly where we stopped on the lower spike. That's the one I'm really monitoring very, very closely. So those two levels that you just mentioned, the 138.40.50 and the 137.75, are going to be the do or die levels for now.
Look, I think the dollar has a similar formation. Yeah, here's 1, 2, and another one. And you know, the third drive may come in at this real important level, which is this 104 level. If you take it back to the, you know, you take it back to COVID, right? So
yeah, I heard exactly those levels mentioning the 104.
Yeah, look at that. I mean, that was a breakout.
That one.
And you know, when I think a line is valid is when it comes back down, what it does. And, you know, look at the wick on this month went right there. So I think this is the line in the sand for the bull bear case for the dollar. Okay, it'll be more than a correction if we negate a major breakdown.
Yeah, that's true. I mean,
right?
Yeah, some people are looking for it to get materially lower in the new year, but then don't we hear that every year, right?
Yeah. Well, you know, it was such a prolific bull market that normally you could expect at least an echo, some type of failing rally at least, instead of just make a high and then collapse without, you know, putting up a fight at important support for a recovery, not necessarily new highs, but, you know, say 115 to 104.11, come back maybe to 110, and then make this a failing rally, and that would be, you know, a big move coming after that.
Yeah, well, if you take it if that one over several months, let's say, it could coincide as well with the what we know ultimately will be a stopping in raising rates, and perhaps other central banks will still be catching up on the Fed. That's in the line of the possibility. But then, yeah, we're having trouble to know what's happening the next few days, let alone what's going to happen
Yeah.
in half of 2023, right?
Yeah. So silver's outperforming today.
I kind of like it.
Do you? It's
Yeah,
out.
but we are again struggling in the 22 and a
Yeah.
quarter zone. That is really, we spoke about it on the flow show as well a couple of times already, and that's really my zone. If it goes through, I think we need to get
Yeah.
more. But in the meantime, it could still come back to what is it, 21 and a quarter. There's a
Yeah.
25, 45 is our good levels there. As you can see, the red, the 50 DMA, right?
Yeah. There, yeah, right there with the 9.
Yeah,
So yesterday's low is important.
yeah, I
I
think
wouldn't
so.
want to see silver close under 2080 or under 21. I think that would be your first sign that something's wrong.
Yeah, that's true. And the thing is on moving averages, I don't particularly like it on FX pairs, but anything that's more like to do with other assets like metals and perhaps equities and so I think they're much more valid than on FX pure FX pairs.
Yeah, and gold hasn't had a down day in a while, but if we get up to this moving average at 1800,
Yeah, big level up there, big
yeah,
zone.
I think that we'll put in maybe something like a right shoulder on it on the weekly, where you get this is your left shoulder and this is your head, and then we come up here and then we get some type of correction, maybe even this steep back to 1700. But that would take a pretty good, there's nothing I could think of that to drive the dollar back up except geo. I don't think it's going to be interest rate differentials anymore. So it has to be, like a bomb going off and people not
Well,
wanting to be in Europe, like you
and,
used to say, Kman.
and good morning, Dale.
Hey,
I was,
Blake.
hey, and good morning, Kman. I was just going to add, you because you were just saying, there's what are the other reasons why the dollar could go higher? I think it's more of it could be more of a risk aversion play here.
Okay.
I do think that the S&P is really struggling at this 4,000 level. As we get close to that 200-day moving average, I think the risk is that we're getting to a period where the markets are going to start to struggle.
Good
and
point.
The dollar is going to catch a natural bed. I think you are correct, just by stating that it's going to be less interest rate differentials, but at the same time, we're also at a period where central banks could start shifting rhetoric and expectations moving forward. So I don't know. I think it could be a combination of both here. But today's data, and just I wanted to say today's data, especially out of the UK, Kman, we had this CPI data that's obviously very high, and I think a lot of people forget how sticky inflation might end up being. Not only in the UK but globally. So what are your thoughts about that data that came out overnight?
Yeah, we had the spike, and it's been said a couple of times already that October would be a spike month, and we got the spike. Yeah. So Kman is higher, but if you look at the sterling crosses globally, well, take away the yen, because that's a bit of a leading a life of its own right now. But the sterling crosses are not really much higher, right? So the markets, let's say, apart from the dollar side, the markets shrugged it off a little bit. Euro sterling is just in the middle of its range, so it's not really moving much. I think the sterling yen is more a factor of yen than sterling right now, because we see most of the yen pairs are crawling back up. Ex dollar, most of the yen pairs are crawling back up. Yeah, so we had the spike, and interestingly, we have Bailey and Company talking to the Parliament Committee on Monetary Policy, on the GDP, and probably on inflation as well. In about an hour's time, they should start their presentation and the grilling surrounding their monetary policy. So we can see sterling move a bit on the back of it as well.
Yeah, so Dale, going back to your point about the dollar, and I don't know, well, unless you guys were in the ForexAnalytix community, you didn't know I was actually trading the dollar on the long side yesterday following the PPI data. So that PPI data, even though it was stronger, or excuse me, weaker, excuse me. We spiked down, but we spiked back up again. It gave us a false breakdown in the dollar yesterday, and I was playing it on the long side at the hospital. And then when this whole Poland issue came up, the Russia, Poland, US, I guess we could throw that in there too. When that came up, I just took everything off, but you could see how the dollar really responded to that. Now I know, a lot of it was euro related, but we live in a tumultuous time and in a risky place. So any type of fits of risk aversion will definitely benefit the dollar. So now going back to inflation, Kman,
Yeah.
you got this PPI data that comes in a little weaker. CPI data came in a little weak, with the US last week. Is this enough for the Fed to call it quits?
For me, no.
Okay. So that begs the
But
question.
you have to choose your currencies, right? That's always the thing, right?
Right. Yeah.
So
yeah. Well,
I've gone on a more exotic tour and bought dollar China close to 7 and I'm trying to catch knives in dollar yen. I'm not gonna. When dollar yen comes off close to 39 and below, I'm trying to buy a few, let them go when it goes higher. As I said, I'm trading ranges, but I'm trading ranges again from the more dollar long side.
Yeah, so the dollar yen, let's look at it technically and kind of just take a bigger view, because this is something that on the week ahead video, knowing that we're at the 618 retracement, if you look at the I want to say this is the wedge move, you could arguably if you want, you can grab that spike low over here, but it's going to give you the same measurement, right?
Yeah, we are not far from
what's that?
It's in this zone. The measurements, if you take the bigger side or and then the break below, we are in this zone.
Yeah. Well, it's a 261% extension, and you can see it. They both match up exactly, and the 618 retracement. So again, it's like wherever you want to measure it from. In the longer term 618 retracement, it's just we're in an area where we're going to naturally find a lot of support. I am a little concerned, and this is I'm going to tell you guys this because I was also here. Let's go in ForexAnalytix room so you guys can see. You can go into the trades room, and I actually got a comment on the week ahead video from Max Trader. He's probably listening in right now. He was like, hey, in your chat room, you got people going, buying this, buying that, buying this, buying that, and then, talking at the same time. We actually split up our chat rooms like a year and a half ago. And it's been really nice to have like a specific place in our trades room where we just talk about our trades that we're doing. People, are you can see it's not just admins. There's obviously everybody's in here doing what they do. And then we have a general chat room too. But this is yesterday, just taking off all those dollar trades. But I actually had, and I put on a dollar yen long as well. And I took it off yesterday because I am a little concerned, Kman, and this is the point I was trying to make. I'm a little concerned if we do get some risk off. Do you think that yen could catch that risk aversion bid again? That's what I'm really concerned about.
I mean, it's one of those correlations when that went out of the window around March, April this year, and we haven't really found it back yet, because dollar yen could collapse despite equity markets holding. and then it bounced again, and it's I don't think the correlation is back yet.
I don't think it's back yet either, but is there a risk of it coming back? Because I think traders have this really severe case of ADHD, and they lose focus on things and they forget things. So the very short term, memory in the markets. So
I tell you what, and that's just my 2 cents. I think the correlation will be back once interest rates everywhere stop moving.
Yeah. Okay.
And then I think personally the correlation will come back.
Okay.
Because then people will have to shift their attention to other stuff, and then the correlation could really come back in full force.
And it's funny, I've been navigating through the markets for about a quarter century, and you've got a whole decade plus on top of that. And isn't it funny though how traders really completely forget that things used to happen a certain way? Like, I think traders completely forgot that the yen actually was a risk off safe haven currency for like the last 2 decades, right? So and so you got to be reminded during periods like yesterday, when even though it was probably a mistake or an error, and the missiles landed in Poland, and nothing, I'm not sure what happened, obviously, because I was in the hospital, but the fact of the matter is, if things do escalate, where do people run to? And one of them is going to be the dollar, and then you could probably see the yen as well.
Yeah,
so.
And I also think it's one of the reasons, the decoupling of the yen versus risk lately, that one of the reasons why Swiss is also strong, because Swiss took over a part of the role, right? Of this. But then, as you say, correlations shift. So if, like yesterday, for instance, we saw euro yen.
You guys weren't supposed to see this.
Very rapidly, and then bounce. So at times the correlation will come back, but it's tough to put a timing on it, but I don't think it's there just yet.
All right. Well, I think it could come back really soon. Yeah. So, Stelios, how about you? What are you thinking?
I'm thinking I'm a bit hungry. No, what do I think? As I said yesterday, I'm not convinced yet about rates peaking and the bottom is in and everything. I am not convinced yet. Lael Brainerd was, we have to admit, on the dovish side, but I'm not convinced until I hear the big man himself. So until then, I think we're chopping around. Probably could grind a little bit higher in risk. Maybe the dollar keeps grinding a little bit lower, but when we do get Powell either confirming or not that they're set on the course and nothing is going to take them off it, not even a couple of readings of inflation lower. Depending on what he says, then I'm going to make up my mind. I don't want to try and second guess him. I really don't. I'm still
Jim
Oh,
long
Welsh
a little bit.
agrees with you. Stel.
Oh, good. Well, I really admire Jim Welsh, so I'll take that positively. And what was I going to say? Yeah, I'm still long a little bit of silver, nicely in the money, but I'm not totally convinced yet. Hence, I am not going all out long on that. But yeah, if you ask me what I think is going to happen in the next few days, I think we probably grind a little bit further. The S&P could get towards 4,100, but then I don't know is the answer.
You do, but I know. Well, you know what? I wish we all knew. Hey, just really quick, we've got Canadian CPI data coming out today. Kman, you have any thoughts on the CPI data coming out? Look, I think this is a very, very, very good risk reward to be on the long side here. We've talked a little bit about it, especially in the ForexAnalytix community. I don't have a long in yet, but we're at the 618 retracement, big breakout points. we had this head and shoulder pattern that should eventually make it to 130. Most of you already know that because we've been talking about that for the last couple of weeks. I was on the short side a week and a half ago, playing it, about down to where we're at now. I've been a little hesitant about being short, and I don't have exposure here, but we do have Canadian data coming in today. What are you guys' thoughts here? I mean, I want to buy it because I know where the risk is, and as a trader, that's the best thing that we can do and that's really the only thing we can do is really just manage risk. And at this point, the risk is below 132. But do you buy it here? I mean, is this the one you jump into? What are your thoughts?
If you ask me what I think about CPI, if we have to believe CPI data in the US, its neighbors CPI should also start to come down a little bit, but that's not expected. The expectation is actually for a high print only month over month. But as you say, your risk is very well defined. It's 132 the figure, and it's also I'm just taking my charts again. It's also if you would consider a bit of a channel from the highs in dollar Canada, that's also where the low side of the channel lies right now. So everything points at 132 at being your level of no return, right?
Yeah, and I think if we do drop below 132, then you have to imagine that the head and shoulder pattern is going to complete. And if you guys were listening and over the last couple of weeks, that this has been our really focal point. The week ahead video a couple of weeks back, it was like our main chart that we used was the big head and shoulder pattern, and it still has further to go, but nothing moves in one straight line. So if you're on the short side, I think the risk is, and the way I'm trying to play it is I'm trying to play a little bit of a bounce here, or I'd at least like to try to sell a rally if we get one. And you can see that in the basic technical analysis if you're looking on some of the more intraday charts, looking for some sort of bounce to sell into, because overall I think that the dollar is going to continue to head lower here. But this Canadian data might throw a little bit of a monkey wrench in everything. Now, also keep in mind that we do have other data out of the US. We have retail sales. I don't know if Steve is here. Steve, are you here?
I think so.
Oh, hey, Steve. Hey, how you doing? So good morning. Or
good morning.
What time is it over there in Athens right now?
Over here, it's 3:22 in the afternoon.
Well, good afternoon.
Hey, good afternoon.
So let me ask you, we have retail sales coming in, and what do you think is going to happen with the consumer? Do you think the consumer is going to buckle here?
I've said multiple times that I don't want to play the game of predicting every single data point, because they can be volatile in the short term, obviously.
Yeah.
Now there is an estimation that we're going to get a rebound in retail sales. Might as well be the case. I'm not very optimistic, though, if we're talking about the medium to long term. Now, having to do with Canadian data, it was Kman that commented that inflation should move in the same direction as in the US, which in general is a valid point, although we have to take into account here that while the US dollar was getting stronger and stronger, because don't forget the data we're looking at are for the prior month in essence, right? The Canadian dollar was weakening, so that might as well keep inflation high in Canada as long as their currencies has been in a depreciating course. Yeah, it very recently changed paths. And I do agree that 132 is a key level, but all that has not been taken into account in the inflation print we're going to be seeing today. So keep that in mind. Now, yeah. I think having to do with the fate of the USD CAD, since you mentioned it, and USD yen, because they have a rather similar technical pattern, I think that the inability from both to really rebound during the past few days probably says that there is more left to the downside. So although risk reward
is that your bias speaking, because you're short dollar yen for the last couple weeks when it was up here, or is that because No, I mean, is it bias or are you making other observations?
No, it's purely a matter of
An
the
observational
technicals.
bias.
What's that?
I don't have a stake in USD CAD, but my comment in USD CAD is that although risk reward does favor longs against 132, I think that the chances are in favor of actually 132 breaking to the downside.
I'd agree with that. The question that we'd have to ask ourselves right now is, can we bounce back? Are we going to see 130? Are we going to see 130? Or are we going to see 130? Let's just call it 134.
I think 130
first. Really?
I think 130 has a higher probability. Yeah.
Okay. I'm gonna hopefully disagree with you because I just want to be a seller up in these levels. That's what I'm hoping for. Hey, look, we got about 5 minutes before the data comes up. I want to talk a little bit about the S&P really quick. Dale, what are your thoughts here about the stock market? I mean, we are getting close to the 200-day moving average. Was very, very long risk down here on that spike low because that was a false breakdown. And you guys always hear me say false breakdowns lead to breakouts. We got the false breakdown led to the breakout, but that's past tense. It's already done. The 200-day moving average, channel resistance, all coming into resistance or all coming into play. We're heading into a seasonally tricky time of the year where I've seen, Santa Claus rallies happen before Christmas. I've seen them happen after Christmas. I'm not too sure I want to lean into any type of seasonal trends at this moment in time. I think while we're below the 200-day moving average and definitely below this channel resistance, you want to be on the short side of risk. How are you feeling about stocks here?
I actually think Dale stepped up for a few minutes.
No, I'm here.
Well, Dale,
oh, you are. Okay.
Oh, is he
Yeah,
here?
you saw the CK message here, buddy?
Go ahead.
So, I think they will get a 1 week pullback or so into Thanksgiving, but that big trend line everyone's looking at from the highs, Blake, everyone has that trend line there from all-time highs. I think we're going to break it. Sometime in December, and that's going to turn so many people bullish. And we could just rally back to the July, August highs and then roll over again. So that's what I'm looking for, is everyone's ultra bullish on a breakout over this trend line and then look for it to abort.
Yeah, and that's the thing. Its positioning is so key in the markets, especially when you have two-way price action right now, and that's what we're seeing in the markets. We're seeing a lot.
I think Putin wants to ruin our Christmas, so that's what I'm thinking.
All right,
Blake,
well, I think the levels are pretty well defined. I don't have any shorts in the S&P yet, but I'm looking at two specific areas. It's really, a move up towards, above the 200-day moving average towards this channel resistance. I'll be on the short side somewhere up here.
Okay.
And definitely a break below this breakout point. So you can see that this was the previous 50% retracement. There's also horizontal support. So a break back below that, I want to be short. And then, I think we have to see how the dollar reacts there. You have to look at the dollar and see if it is catching that risk off and risk aversion type of bid. All right. So we got about, let's see, we've got about a minute left before data comes out. Let me go ahead and pull up I'm going to pull up a couple of charts here. Yeah. What's up?
Lucas says, and I confirmed it, Genesis is suspending customer withdrawals. Genesis Global Capital has post withdrawals, etc. I said it the moment we got the FTX thing. In my opinion, this is going to be the beginning of a much, much bigger type of development here in the crypto world. So I'm going to say it once again to put it on record. I think we haven't seen the worst of it. And I think we might see some big developments.
Well, Steve, let's cover that in about 30 seconds.
Yeah, 30 seconds.
All right,
I know.
Look, we got data coming out, so just you can talk all about Bitcoin in just a moment. So here comes the data, and just so you guys know, here's the data flash.
Let's you pull get up for free here.
What's that? What
you get for free as a member?
It is free. Or included.
Hey, I see Brian Twomey hasn't found a life yet.
Okay, here we go. 3 seconds.
All right,
Okay.
here comes the data. All right, dollar yen spiking higher.
Canadian CPI in line.
Retail sales much stronger than expected.
Yes.
Dollar is strengthening. And I am, hold on really quick. Show you guys right here. This is what we do. This is how our chat room operates, just so you guys can see.
Now, the US better retail sales is definitely, in a sense, not the market wants to see, having to do with risk on. Theoretically speaking, of course, good data should be good data. But in this case, don't forget that the market is solely focusing on what can force the Fed to pivot, as fast as possible. And the fact that employment data have not really soured that much yet, and retail sales are holding, is not good news for those that want to see Powell, give up on fighting inflation.
All right, just closed out the dollar longs that I had prior to the news. And there we go.
Way to go,
all right,
Blake.
so I want to say, everybody, thanks for being here. And I hope you guys have a great trading day. Dale, I know you have an interview. Also wanted to mention that if you guys haven't checked out the Trader Funding Program, we have a lot. Actually, how many accounts are now trading how many new accounts that we had, Steve, that accessed our money this week?
Stelios is the best number.
My wife's been in the hospital.
Off the top of my head, last couple of weeks we had 5 or 6. I think I have to check.
So it's been pretty good. So congratulations to those of you guys that are qualifying. Check out the Trader Funding Program. This way you can jump in the ForexAnalytix community. As part of being in our community, you can trade our money and take none of the risk. So there you go. All right, guys, thank you so much for being here. Dale, have a great interview. And congratulations for those of you that were long the US dollar going into this data. I'll talk to you soon.
And congratulations on being able to take your wife home soon. And everything went well, and everyone here is relieved for you, brother.
Thanks. Appreciate it.
Okay, so I'm the host now. Okay, so I have Okan with us today. Okan, welcome back to F.A.C.E. Was looking forward to talking to you today.
How are you, Dale? Thank you. I just turned on my microphone. Thank you.
Okay, your mic's loud and clear, crisp. Did you want to share your screen today, Okan?
Yes, I would like to share my screen with you.
Okay, and Okan is a CTA. If you guys don't know, that's a regulated advisor, commodity trading advisor. So, if you have an account with the CTA, you have the regulators watching over the manager's shoulder to make sure they're, doing all the right things. Segregated accounts, which, has really become an important thing to have and be with where do you clear your business as a CTA? With everything that's going on in the crypto world, where you have your money is becoming as important as how you trade your money. So, Ken, are you there?
Yes, I'm here. Which is that a question? I
yeah, it's a question. You're a CTA, so you have accounts. Just curious who you clear your trades through.
Okay. I've been working with StoneX on the future side. I don't trade foreign exchange.
Okay.
But I like.
What's the name of the clearing firm?
StoneX.
Oh, Stone. Okay.
StoneX, yes, and that's a well-known brokerage company.
Yeah, they're out of Chicago, right?
Yes, and
okay.
They're also, of course, they are regulated.
Right.
And
They're also the other advantage is they're a member of the exchange. They're a clearing member.
yes.
And if there's ever a problem, the exchange, you know, people don't know this, but if you're who you clear is a member of an exchange, the exchange actually guarantees funds if there's ever a problem with the clearing member. So you have the whole exchange behind you, something to consider when you're opening accounts. So the share screen's at the bottom, Oken.
Yeah, I'm looking for that facility to see how I can share my screen with you. I'm
Okay, you
looking
roll
at
your cursor down near the bottom of the screen and you'll see a green box.
Oh, okay, I got it. I see that right now. Okay, now here, there you go. I have 4 slides to share with you today, and
Okay.
I would like to talk about the dollar index versus the gold-silver ratio and the 2 years minus 10 years U.S. Treasury yield spread, because they're all related to each other. Well, the thing I want to share with you today is that, first of all, as I mentioned you earlier in my previous meeting with you, I mentioned that the gold-silver ratio is very well correlated, positively correlated with the dollar index. And if you look at the screen, you're gonna realize that the um, the reddish, not the reddish, but
The orange?
the orange one, yeah, the orange line and the white lines, they move together. And you know, not on a daily basis, of course, but on a general level, they tend to move together. They like to move together. So this is one given observation about these two pairs, the gold silver and the dollar index. Now, what I do here is basically I use the 2 years and the 10 years treasury yield spread, which is you subtract the 10 years yield out of the 2 years treasury spread, and you get the number. And when you draw the chart of it, which you will see on as a purple line, you should be realizing that when this chart increases, the dollar index increases as well as the gold silver increases. However, this chart that we are looking at is starting from 2012 till 2022. It's like a 10 years time period. But over the past, if you look over the past about 6 months or so, notice that the gold silver ratio and
Came down.
came down, and the 2 years and the 10 years spread of the treasuries has gone up. So this is interesting because one of them is not correct. Well, I believe that when you look at the market dynamics, there's a better chance that the 10 year spread, I mean the 2 and 10 year spread, is going to fall simply because the 2 years treasuries may fall due to the fact that the inflation numbers that are coming are not as hot as before.
Okay.
So
can I just clarify something for myself and maybe the viewers? Are you saying the correlation is when the gold silver ratio is heading down, that is bearish the dollar?
That is the, yes, it means.
And when it's heading up, it's bullish the dollar.
Exactly. So the gold silver ratio, when it goes up, it means it's bull dollar, because notice that the gold-silver ratio and the dollar index move together, right? And even in the last year, even if you just look at the last year, the right-hand side of this chart, the very right-hand side of the chart, you should notice that the gold-silver ratio and the dollar index have been moving
down
together. Yes.
Yeah.
Yes.
Right. Are you looking for it to dig its heels in here and recover the gold silver ratio to start heading back up and the dollar?
I believe that the gold silver ratio is at the right place, but the 2 years and the 10 years treasury spreads should be falling, which means the most probably the 2 years US treasuries yield should be coming down. And I think this should be true, given the fact that the latest price data, which is inflation data, is coming down. If you realize that they are not as hot as 2 months ago or a month ago. And if you look at the ISM numbers, the price index of the ISM indices, the same thing is true. The price indices are falling. They're not increasing as before. So
what's actionable? Do you buy the gold silver ratio here, which is a CFD, or do you buy the dollar for a bounce after its big slide? Or are you looking to do something with the 2-year note that hasn't manifested that direction?
Well, I would imagine actually selling the dollar, but not right now, because the dollar has already gone down, as you see in the last few weeks. Yeah. So there should be a correction coming for the dollar index, which means the dollar index should go as high as maybe up to 108 again. And that moment could be the time when you can short the dollar index.
Okay.
This is what this chart is telling me. And especially if the purple line, which represents the 2 years and the 10 years yield spread, if they begin to fall, that's going to be a very good sign that the dollar index may likely fall too. But again, for the moment, I think that the dollar index has already gone higher enough to make a reasonable correction. So it's not the right time to do that, but wait for at least about 2.5% increase in the dollar index before you short it again.
Okay. So looking for a correction after this fall.
Exactly.
Okay.
And also, if you allow me,
and gold silver ratio.
Yeah, exactly. Same. It's going to be the same.
All right.
And there's also one more thing I would like to share with you is, what do you look at when you do this trade? I would suggest that you look at the personal income and wages, as well as the productivity data. What I mean by that is, if I move to the next slide, and here you go. Just look at the, if you realize that from January 2022 till today, the average hourly wages have been going up like non-stop, right? So it's
right.
There's no
productivity is falling.
Exactly, but the productivity has been falling, and that's the reason also why the inflation expectations have not been going down for some time, and this is actually what is the concern for the Fed. But look at the very last data, where you'll realize that the non-farm labor productivity is not falling as before. Right. Now it's actually increasing just a little bit. See, so we can assume that in this case that the fall of the productivity has stopped, and now it's rising gradually. And the fact that it's rising gradually is also an indication that the inflationary pressures are fading. So this,
Let me ask you
and
this. I think, this is something that is worth thinking about. Why has the CPI and PPI moderated? Is it because there's some economic weakness behind the scene and we're only looking at inflation improving when part of that reduction is the economy beginning to slow and the demand destruction is having an impact?
well, I would say both of them, but um, mostly the fact that the Federal Reserve have been increasing the rates has influenced the market such that the the unemployment begin to increase. So when the unemployment increased, after it increased, it is normal that the labor productivity goes higher. So that's normal. So this increase in the labor productivity is also represented. I mean, it also represents the increase in the unemployment. So the rise in the unemployment cut the demand, of course, and also the rise of in the interest rates has also cut the demand for housing. And when this happens, uh, from one end, the demand falls. On the other end, the productivity increase means that there is less, I mean, pressure for inflation from the supply
Okay.
side. So
Does this
from
give
the,
you more of a risk on belief than risk off?
would you repeat again, please? I couldn't hear
Would
that.
this give you more of a risk on belief than a risk off? All this
Oh,
information.
okay. This looks like a risk off. This
Okay.
looks like a risk off, and this is the reason why I am agreeing with the gentleman who mentioned that the S&P 500 may be rising in the next few weeks and months to go.
Okay. Okay. So,
So,
but that's risk on.
oh, this is how you mentioned if well.
Yeah. If people are buying the S&P, they're buying risk.
Okay. So if you see that,
Okay.
right,
When
okay,
when the market is selling off, it's risk off.
okay, I got it. Well, that
Okay.
I didn't know that. I just thought that risk
So
off means.
let me ask you, because I'm trying to, extract it from you. With this information, how are you positioning your clients in the market?
Okay, I tell people who follow my newsletters that I would suggest them to wait before they go long. They go short on the dollar. And I also suggest people that people should be waiting to do some energy trades, especially energy spread trades, but remain silent until things get a little bit certain. So that's what I am doing at the moment.
Okay. So you're waiting for a rally to sell the dollar,
Correct.
and you're waiting for the right time to buy energy.
And that's what I would like to explain to you in the next
Okay.
slide,
Sure.
if I may. When I move to the next slide, Dale,
Okay.
I'm going to show you an interesting chart. Okay, the blue line here represents the hedge pressure spread between the gasoline and the heating oil. The hedge pressure means that when the refineries produce the product, for example, gasoline or whatever product they're producing, they tend to sell that product in the futures markets as a way of hedging. So they sell futures contracts. And who buys the futures contracts is the speculators buy. So this means whenever refineries increase their production, every marginal production is hedged by the refineries by selling short to the long speculators. So in that case, the speculators begin to purchase futures contracts from the short hedgers, from the refineries. So if this activity increases, what happens is the long positions of the speculators, the large speculators, begin to increase. And what I do here is I look at the hedge pressure of the gasoline and I subtract it from, I look at the hedge pressure of the heating oil and I subtract that number from the hedge pressure of the gasoline. And when I do so, I get this blue line seen on the chart. And this blue line basically represents the hedge pressure spread between the gasoline and the heating oil. So gasoline minus heating oil hedge pressure. And the shaded area on the chart represents the gasoline price divided by the heating oil price. So it's gasoline heating oil pair, if you like. Okay, and they move together. You see, they like to move together. And what is more important is hedge pressure spread of the gasoline and heating oil is actually leading the gasoline heating oil spread. So hedge pressure spread of the gasoline and heating oil is actually leading the gasoline and heating oil price spread, which I find very valuable because it is leading basically. So after providing you this information, if I may move to the next slide. The next slide is showing you the last 3 years time frame, where we have the hedge pressure spread of the gasoline and the heating oil shown on the red line, as you can see on the red line, and also you can see on the yellow line, you can see the spread of the gasoline and heating oil. Okay, so this is basically showing you this relationship for the last 3 years. This is what is showing us. And when I look at the last decade, every time the hedge ratio, hedge spread ratio between the two commodities, between the gasoline and the heating oil, fall towards the end of the year, and they tend to rise in the first quarter of the next year. So this means that if, for example, if in the last 3 months, if this ratio has been going down towards the end of December, then most probably, I would say out of, I tested it and in 10 out of 14 times, it has been true that this spread continued to increase from January till March of every year. So I'm talking about the probability of it.
Very good.
So,
Very good odds.
So this suggests that, when I look at the data of today, I see that this hedge pressure spread has been going up, not down. So this says to me that the probability that the spread, the hedge ratio spread will increase from January till March is decreasing. So it doesn't look very good. In that case, if you're trading gasoline and heating oil spread, I would suggest traders not to jump into gasoline starting from January, but wait at least until end of February before they go long on the gasoline and short on the heating oil.
Okay.
So that's basically what I would like to share with you.
Well, I appreciate because definitely tell a lot of thought and work and time goes into what you presented us today, Okan. We learn from everybody, and yeah, I hadn't thought of the correlation of the gold silver ratio and the dollar before, but seeing it visually, I learned something from you today, and appreciate you being here and sharing your work with the community. Best way for people to get in touch with you or follow you, would that be your Twitter handle?
Yeah, sure. My Twitter handle is my first name and last name all together,
Okay.
followed by the @ Okan
Okay.
Aybar.
Okay.
Yes.
All
And
right.
I will continue to share this kind of charts in the coming weeks.
And you also write a newsletter?
Yes, I am writing the newsletter in the local language, but I will start writing newsletter in English, and I'm going to start sharing it with you. When I do so, I'm gonna let you know, so you can let your community,
Okay.
and they can follow it.
All right. Well, my trading warrior brother, I'm rooting for you and your trades, and actually on the same side of the trade, looking for the dollar to give some back. So thank you very much, Okan, for coming here and edifying our community.
Thank
And
you very much, Dale.
I do believe that one of your countrymen who could read your letter in current form is asking for the link to read your newsletter. Erdim Yildirim is asking for that.
Oh, okay. If you can
So there are,
contact me.
we do have Turkish speakers.
Yeah,
We have a very international community,
yeah.
and
If
we
you
all love each other, which is different than the world, because we all share the same goals here: to slay the market without being slayed. Oh, and
Yeah.
he's one of your former students.
Oh, okay.
Yeah, so you should know how to get a hold of him then.
Yeah, he should be. He can contact me directly.
All right.
And I
Anyway,
want to tell you, Dale, that I always feel very lonely when I look at the markets and make my assumptions and my analysis. But when I hear people saying and thinking the same thing, even the opposite, I feel I feel less lonely. So I must tell you that I'm learning from you too. So thank you very much for this
you
community.
you may even want to consider hanging out with some like-minded people at ForexAnalytix in their chat rooms. I mean, there are many people where this is their vocation, not a hobby, and they're interacting all day long. If you're lonely and you also want to share your views and see what other people are thinking, it's a pretty good mastermind. Think
That will
about it.
be really great. Yeah, I'm gonna look at that.
Okay. All right. So thank you again, and good hunting. And we'll be talking down the line, Okan, and have a great holiday season, and be talking to you next year.
Oh, sure.
And
I'll
don't
talk
be
to you next
lonely.
year.
Don't surround yourself with like-minded people. And
Will do.
I talk to them every day, and pretty large active community. So
Sure.
that's a wrap, everyone. Don't forget, don't just count your pips, count your blessings, and you could be with the team in 15 minutes on the morning edge. We'll see everyone tomorrow. Good hunting the rest of the day. Thanks again, Okan. You're welcome,
Thank
Paul.
you.
You're welcome, Pavana. So people are thanking you, Okan.
Thank you all. Thank you very
All right.
much.
All right, take it easy, buddy.
You too. Thank you.